Good morning and welcome to the Early Bird. And here we're looking at the Dow Jones on a 30-minute chart here. And we'd seen this impulse wave coming down through here, which we coined as wave 1. And we were looking for wave 2 to come back to the 61.8 retracement level. And it's pretty much done that. We're also considering the 11.5 here as the medium level. And now what sort of bothers me here a little bit is that, well, first of all, if this is wave 1 coming down here and this is wave 2 coming back through here, then wave 3 to the downside will make new lows here. And wave 3 should be longer than this wave 1 here. So that's what we've got to look forward to. But what bothers me a little bit here is that this move up here appears to be more as an impulse wave, like 5 waves in terms of 1, 2, 3, 4 as an A, B, C for the 4, and the 5th wave here being much the same as wave 1 here. So it's got more of an impulse wave to it rather than a corrective ABC rally. So it is possible that this can just be there's a couple of possibilities. First of all, the wave 2 here is complete, and we'll start to see this work to the downside. And the reasoning behind that would be this particular structure here being 5 waves down, and also the bigger picture behind that wave as well, the big wave 4 that we've got. And this is a large ABC, and this is the top of the C wave here as a wave 4, and we're looking for a big wave 5 to come down. So we'd see that in 5 waves in terms of 1, 2, 3, 4, and 5. So that's our first sort of guess at the analysis. And the second one would be that this move up through here would just be still wave 2, but just the A wave. So it would be an A wave, a B wave in 3 waves coming down to the say 11.2 here, and then a C wave back up to the 11.5, and then failing at that point, and then going down. So that's a bit of a tricky one. If we were totally wrong, and we need to talk about this because this is it does appear to be a 5-wave structure here. So we could possibly get this up for wave 1, and then an A and a B and a C coming back here for wave 2, and then pushing higher up through there. So that's a real possibility as well. So this up for wave 1, back for wave 2, and then up for wave 3 and 4 and 5 as a big C wave. And we talked about that. The only market that I can find that actually supports that theory is the Dow Transports. And I'll just go back over that wave count there, just so that we're all on the same page a little bit. This is the Dow Transports here. And as you can see here, we've got this high here. See, the Dow Jones never made that new high there. It was lower, so that was the high there, and that's the same with on most other indices as well. But I have a bit of respect for the Dow Jones transports. So we have this wave 1 coming down, wave 2, wave 3, wave 4, and wave 5. That's a possibility, and then we'll see an ABC correction going up, so an ABC like that. So we would be looking at a 5-wave structure here for that to complete there. That is a possibility. Yes, I also do understand that that this whole correction here can be a wave 4 as well, in terms of down for 1, back for 2, down for 3 here, then an A and a B and a C here for 4, and then down for 1, back for 2, and then down for 3 and 4 and 5. And that's our first option with all of this as well. But when I see something that's got a half a silly chance, it needs to be put on the table until it's sort of eliminated. So yeah, just getting back here, if we looked at the Dow Jones, for instance, you can see how this high here is higher than this one here, and that's not the case on the transport. So, but we'll run with this for the time being in terms of this is an A and a B and a C wave to here, and then we're looking down for 1, back for 2 here, and then down for 3, 4 and 5, and down that way. That's what we've been playing for, and we'll continue with that. So we just need to go into here in this rally here as wave 2 pulling back 61.8%, or to the close to the 11.5 there, and then we need to start having a look at the downside. So if we start looking at this here on the 5-minute chart, which we can do, I guess that you see this area here, that top's not quite there, but that whole point there, that 11.2 there, that's kind of the pivot point in this particular correction here, because it's kind of the centerpiece, and also from 11,000 being the sort of a whole number, supportive number, then 1, 2 and 3 here is group 1 as I see it. Now in group 1 here, the 2 is the pivot point here, so this as support or resistance is really where it's all about. But as you can see, it's been overshot here and it's coming back to deal with it now. So in the end, or at the end of it all, is that this 11.2 here will become support or resistance, and that's where we'll play from. It's a bit like subgroup 2 or minor group 2, where we use the 72 a lot as the pivot there. Well, the 2 is the pivot in this case here, and that's what we'll be looking at. So it's something that we can look forward to and something that we can use. We also know that when a market's pushing up through, because each number is a degree of, it's got a hierarchy in terms of being stronger or weaker than the next number. And we know that the 11.5 here is the big sort of daddy of them all here. And then to the downside, the next important number is the 11,000 here. And then from that point there, we know that group 1 is next on the scale of things, and then within group 1 here, if we're going to be bullish, then we would be looking for 11.3 here, the 300, to become support, and that's important. All I'm doing is scaling down another level into the 2 here, so they're just degrees of you know, of strength, and that's what we're sort of working with. So we've got those degrees of strength in that sort of matrix there that we can work with, which is good, because they create the setup, should we be long or should we be short. And then the next thing is the actual structure. So this, because the trading is a game of support and resistance, and there's a big difference between analysis and actually, you know, having bets placed. So it's a game of support and resistance with money management, but the Elliott wave can be very helpful in the direction of things. As you know, it can be, you know, surgically sort of accurate and hopelessly drunk at the same time. So that's why the support and the resistance needs to come in and sort of concrete things up a little bit. So on this little structure coming down through here, if this was 5 waves up here, the problem is that would have an A wave, a B wave and a C wave. So it would be an A and a B and a C. Now the situation there is that this A wave would be in 5 waves, the B would be in 3, and the C would be in 5. Okay, now it's the same as if that was a top there for wave 2 rally. If this was going to come down as wave 1, then that would be 5 waves as well, and then back for 2 would be 3 waves, and then the move down for the 3rd wave would be in 5 waves as well. So in both cases they would be a 5, 3 and 5 structure. So we're still no better off. It's only until we get to 11.2 here as resistance, or if this move down here is in 5 waves in both cases, and then we get the 3 waves back, that's the same. But when we get into the C wave here, or wave 3, they'll both look the same, except there'll be a difference. The C wave will be a bit lazy. The A wave is always sharp, but the C wave will be a little bit lazy. Like, in what I mean by lazy is more like that's sort of on quite a sharp direction down, where the C wave will be more sort of reluctantly to go down. So it'll be on a bit more of a sort of closer to the 45-degree angle, where a wave 3 to the downside will be straight down, will be very sharp, because wave 3s will have the volume in them. So we can kind of see here that we've got 5 waves here. Probably don't need to go into the 5-minute chart, but we've got down for 1 and back for 2 and down for 3 and back for 4 and down for 5. So we will go in there, as I mentioned, just to have a closer look at it all. Okay, so look, we've got 5 waves in the first wave here, like 1, 2, 3, 4, 5. So that when we get 5 waves in the opposite direction, what we can be guaranteed of that stage is we can guaranteed of another 5 down, and that's what we're looking in this big picture here. We've got 5 down here, so once we get a rally back up, Obama's going to be speaking at 9 o'clock. I think it's our time this morning, or their time. Yeah, our time this morning. That could induce some sort of rally that would obviously be short-lived, and then down again. The Fed spoke last night, but said nothing new. So yeah, so we've got 5 waves down here for wave 1, back for wave 2, and then we've got 5 waves down to this point here, which would be something down to 1 and back for 2, the whole 3rd wave down here. The 4th wave would be in here, and this could also be part of the 4th wave, whichever it is, it doesn't really matter, and the 5th down to this point here for the 3rd, so that's the whole 3rd wave, that's the 4th, and that's the 5th. And the 5th is a little bit short, yes, I grant that, it may not be finished, we may go down further, but this is yeah, the 11,300 through here. So, you know, that's sort of an important number, and expect the price to flicker around here, but also expect the price to come back and retest the supply area. This is the supply here, but also this is more important up here at the 4.2 here. So finding support on the on 11,330 with top of subgroup 1. Support on here would get us to the 72, and if the 72 got taken out, then we'd get to here, but that's where that would be crunched at that point there. So 5 waves down, 3 waves back up, and then another 5 down. That's what we can expect. Yeah, so until that plays out, we just don't know. That's the point. We just won't know what the situation is until that 5 waves down, 3 waves back up into that supply area, wherever it may be through there, and then another 5 down. So we won't know until this point through here. So yeah, there's nothing we can really sort of do about it except keep trading ranges much shorter, and trade less as well. We've also got, for news on our local markets today, we've got CPI figures coming out for China. That will be one of the main things today to see any markets sort of bump to the upside. So just keep that in mind as well. This is the S&P 500 here. You know, it's the same as what I've just mentioned there as well. We'll have 5 down, 3 up, and 5 down. You know, yeah, so I mean, there could even be the mistake of me making this situation here, of this being an A wave down to here, in terms of an A and a B and a C to here, and then a B wave up to here and a C wave down from here, and then moving straight back up over there. So, as I mentioned in the early bird, there's 3 possibilities, and they just need to play out to some point. And it's the same with exactly the same with the UK 100 as well, the FTSE. And as I mentioned, this does appear to look more impulse wave-ish up there, but that's because you know, there was that sort of hype of a stimulus coming in, but nothing has been sort of said any further on that. And you know, Obama may be saying that at 9 o'clock this morning, evening in US time. So same with our local market here as well. There's a couple of ways to look at this situation here. But it is important that, as you can see here, the line in the sand here is the 4.2 there. So that's the center of minor group 1. So 4,100, 4,200, and 4,300. This move down here yesterday does appear to be in 5 waves, but it's still not much help. I've got it down as an A wave, and then a little A, B, and C for the B wave, and then down for the C wave here, and we can push up here. So this can be an A, a B, and a C wave to this point here, and we can find support back up through here. And if we have a strong closing today on Friday, then it's likely that we can push up from that point there. But we could also view this too, just to confuse it even further, is we can view this as this A wave is in 5 waves down for wave 1, and then an A and a B and a C wave back for wave 2, and then 5 waves down here for wave 1, 1, an A and a B and a C back here for wave 2, and then down through here as wave 3 here. So really it's you can see here that this subgroup 2 area here, the 65, 72 and the 80, the zone here is the support and the resistance here. So in some way or another, in terms of trading, you need to be on the right side of that. So what we would normally do, allow the squeeze to occur in the first 15 minutes of the open, and once the 72 here, the orange line, becomes support or resistance, then you can make the bias up for being long or short from that point, and you would use the 80 as support for any longs, and you would use the 65 as a trigger for any shorts there to the downside. So being on the right side of the 72 is the name of the game. The bias is to the downside because we've got we're under the 4200 here. So if we were above this, the bias would be long. If we're under this, the bias would be short. So this is just refining the situation down a little bit further. You've got the midpoint down through here as well. So if the midpoint became the resistance, then you would look to add again and get down to the 30, the top of subgroup 1 there. So once again, using the price as degrees of strength and weaknesses, you can pretty much narrow down what you should be doing. What your job is to do is to work out if a market is support or resistance. And as you can see here on this 4-minute chart here, we can see that the 65 is the support. We can see the resistance is at the 80 there. We can see currently sort of on close here that we're under the 72. That's why you have to wait for the squeeze in the first 15 minutes of the trade. And one thing that you could look at too is have a look at the real futures market, the day market there, because any gaps in the futures market will be covered, and that's what the SPY will try and do. It will try and cover those gaps on the opening, but you won't see those gaps on the CFD platforms, no matter who you're with. So you need to find a chart on the real futures market and then have a look at what gaps there are between the day and the night. And because the market will try and cover that within a 20-point range. Well, I'm saying a 20-point range. That's when I used to trade it, and things do change, so that range may have traded, but I knew that if it was in a 21-point range, then it would be really gunning to close that gap and then reverse on that gap of that closing there. So you need to know where any gap, even if a gap is 1 point that hasn't been covered and it's like 2 weeks ago, then the market will not forget about that gap. It will find it, and you need to know where it is. I used to keep a 30-minute hand chart on that to find all gaps. A lot of work, but certainly pays off. One thing we could have a look at here is the BHP chart in the US here, and as you can see here, this is 80, major trading level. This pattern here appears to be corrective, and this being a third wave down through here. So we're considering this being a fourth wave in terms. But what I want to point out here that this is down on higher volume here from last night, so there is weakness there, but it's still above support. If this becomes the resistance under the 80 here, then the material sector, the XMJ, will become resistance and bearish at that point, and all the constituents in there would be offering, or at least adding to short trades through that. And that's our sort of our plan really, is to add to the short positions we've got in. We just need the evidence that the market is that will be heading down, and we don't have that evidence from last night. We expected weakness last night because of the 61.8 retracement level on the indices, and we've got that, and we've expected a reaction, and we've got that reaction, but it's not enough of a reaction to show us any evidence that a top is in place. Yes, it can be, and it may not be because of that strong rally that we had up. So just a little bit more working out to get to that particular point there. Right, the gold market is pretty much pretty positive, actually, I have to say, because This market, this price that came down through here is it came down in, we can class that as an A wave to there, a B wave to there, and then you can see quite a clear 5-wave structure in terms of 1, 2, 3, 4, and 5 there for wave C of an A and a B and a C. So we didn't get that. Didn't get a 5-wave structure down here as a C wave. So in terms of 1, 2, 3 down to here, same, 4 coming back to here or to here, and then the 5th coming down. But so we never got the 5th. And now that the price is pushed up above through the bottom of this one here being the A wave or wave 1, well, once that market pushes up through the bottom of this one here, then that makes that the A wave. And the interesting thing here is we've got a nice impulse wave to the upside here. So we've got up for 1 here and back for 2, and then we've got 5 waves up here in terms of 1, 2, 3, 4, 5 for the 3rd wave. So we've got up for 1, back for 2, up for 3, back for 4, pulling back to the 4th wave of 1 lesser degree, and then we've got the 5th wave moving up through here. Now the 5th wave up here, I was looking at this morning and considered this a little wave 4 in here, and then up for the 5th here. So there should be, on the intraday, there should be 5 waves getting into here. This is coming back to supply, meaning sellers here, so it's going to have problems here. So we should see that 5-wave structure there as an impulse wave for wave 1, or possibly an A wave, but 3 waves back through here. So if we get that and then we get back up over here again and get support on here, then you can trade long in 5 waves going up through here. But of course there's going to be problems coming back up into here, and there's going to be problems coming back up here. This A, B, C here makes it corrective, and that top should be taken out. That's how it sort of works here. This impulse wave up here, all this can suggest is 5 waves up. If we get that, then we'll get 3 waves back and we'll get 5 waves up. It doesn't suggest that that top will be taken out. The only reason that top will be taken out in terms of Elliott is because this is in a ABC structure here. That would be the reasoning behind that. So, don't get trapped up here. Wait for a pullback to come in, an AB, get a 3-wave counter trend, and then start to move in from that point there. But if the 72 becomes support after some sort of pattern through here, 72 becomes support, then use the 80 and move up from that point. The idea of getting a trade in through here, though, would be looking to add to that trade later on when we're up at the 1900 again. When we get up to the 1900 again, we could consider this the arrival, the reaction, the support, and then we're looking for a stronger 5 waves up. So 1, 2, 3, 4, and 5 up further. So we'd be looking to add in some way or another on top of the 1900. So a very small position here that's not going to rock your boat, and then looking to add up here further, and basically a trade that you sort of forget about, that you don't have to watch every price flicker. Okay, the copper market for the base metals, very much like the US markets as well, and you can really kind of see that 5-wave structure there, the 1, the 2, the 3, the 4, and the 5. Yes, it can be counted differently, but I just want to sort of point that out, that that does exist there. So we really need to see this price sort of collapse at this stage here, and it is making a bit of a move to do that, but there's plenty of support in here at the 410, the 48, and the 45 here. So let's just see how we go here. This does look sort of bullish there, and that's the same with the oil market as well. The structure up here, like the indices, appears bullish. It's just got a nice impulse wave up there, so we'd kind of expect high, but we wouldn't go long here anyway unless the 90 was support. So there's nothing we can do about it. It can certainly fail from here, in line with the indices, as oil follows stock these days. So we just need to allow this to play out. There's nothing we can really do about it. So there's a time to be in the markets and time not to be in the markets, and this is one of them at this point here for base metals, and this one here. So the CPI figures in China will suggest what the base metals will do from the Shanghai copper market there. The currencies are kind of edging and giving us a bit of a lead, because as the US dollar index pushes up, then the indices, the Dow will be pushing to the downside, and I can see here that this has got more upside here. Yesterday we were looking for a bit more of a pullback really into the 75 area there. We didn't get it. We're pushing to the upside. Now the 76.50 here is an important little number here, and we'll see a correction across there. But while this is pushing up there, the US indices will be pushing down, and that would be the sign that that we are heading down. And of course, the euro will be following. The indices to the downside, and that's what they're doing. In fact, they're kind of leading the way. So this US dollar here index is becoming quite a nice little guide stick. So while that's pushing up, we'll see the indices pushing to the downside. Now, I know this is a little bit messy. I haven't sorted out all the levels yet, but getting there. This is a weekly chart, and what I wanted to point out here is just simply that the weekly trend line is being penetrated here, and it will probably move down to the 138 mark here. Once the 38 mark has been moved here, it's good to leave trend lines in. I mean, trend lines get broken, but they're quite sort of handy in a way, in the sense that normally when a market moves down through them, they'll come back and retest them, and then that's when they come in handy at that point there. So we might just leave that there. But in terms of trading, you can see that we've been talking about the daily robo method, and also the weekly, and we'll be talking about the monthly now as well, because we're figuring that there was a really good possibility that we had a high just in here, and that's why we started shorting on the daily robo method, keeping a stop above here and then above the 144 here. So the robo method on the weekly had given us a signal through here and also through here as well, and the monthly has given us a trigger at the 141 there as well. But for the monthly, the stop is still above the 144, but the weekly robo speaks for itself through here. But what I kind of wanted to point out is that the 138 here, so it's pretty much, we'll be looking at 5 waves coming down through here to the 138, and then a possible retest as an ABC correction into the trend line here, and then going back as well. As you'll notice on the euro charts, that the 50-week moving average is also being penetrated now as well. So that's significant. The 50, the 100, and the 200 are all significant points. So yeah, that's what we're looking at. But what we're sort of looking at in the big picture is as this being down for wave 1 here and back for wave 2 here, and then further to the downside. And we have pegged it really nicely. We've got positions all the way through here, and we'll be continuing to add to those positions, because, you know, if we are right, then we'll be seeing, bear with me here, then we'll be seeing this low being taken out here. So you can see the sort of the excitement that we have on this one here. And of course, yes, we can be wrong, but if you're right, well, you're right. You know, if you're wrong, then you take a loss. But we're seeing it okay down through here, and I guess that this move here, this area here at the 138 here, once that's sort of penetrated through there, then we've got overlapping wave structures with this one. Yes, we have here as well, but that's not the important one. The important one is this one here, and that would bring it into the 138. So 138 as resistance is what we're looking for. So we're looking for that 5 waves down, and then we're looking for some sort of retest. And, you know, we may even get a retest of the 140 here. That's what we kind of, you know, need to be prepared for, and then looking to add to shorts here. And once we got that 5 waves down here and 3 waves back up, then we'll get a big 3rd wave down, and that's the real one that we want. This is all sort of chicken feed here. And that's a little bit like the Dow Jones as well. I'll just sort of go back over something here as well, that once we get our sort of 5 wave structure down through to here, then we're going to get a bounce down here, and that bounce will give us a structure back up to here as we've got down for 1 here and back for 2 here, basically. So we've got this wave 1 down here, but we'll get this wave 2 back. And this wave 2 back, once that's done, then we get the third wave down through here. So that bounce off the 10,000 there, once that comes into play, then we get some sort of corrective pattern. We don't know how far it's going to pull back, but there'll be 5, 3, 5 structure. Could go much higher, could be shallow into the 11.5. I'm just using the 11.5 because that's where the supply will be. Sellers moving down all the time. So we'll see how we go here, but this is the one that that we really want to short through here. So when we get that top into play, then we start getting downside here, then that's when we short, because the market won't come back to this point. See, shorting in here and holding will get stopped out in this move coming back through here. So it's this one we want. This is the one that we'll really focus on. And that's why we focused on the euro first, to get that trade happening. And then we'll get the indices trade happening over here. So, but by all means, you know, this third wave coming down here, if we're right, will be swift and sharp. That's for sure. It'll be taking out a lot of stops. The Australian dollar. This is a picture on the hourly chart here, and we were looking for a wave 2 to come back here, and that's pretty much sort of fulfilled now in terms of we've got. From the last high, we've got down for wave 1, and we've got an A and a B and a C for wave 2. That could be a little bit debatable here as well, and the same on the euro as well. A little bit sort of debatable about that structure there. But what we were looking for is the sort of 61.8 retracement level coming back up through here. We've got that here at the moment. So now we're looking at this structure coming down through here. So we probably could say that, I mean, first of all, the 105 is a sub level, and of course $1 is the big daddy of it all, and then $1.10 is the next one, and $1.10 is a minor trading level, and then the 101, 102, 103, 105, 108 are all sub levels, and then all these here are micro levels in here, but I normally call them sub levels, but I should start calling them micro levels. But point being is that this 05 here, 5 being the second strongest, it's the midpoint between the $1 and the 110, so it carries the most weight in between all of that, and it's the balance point within all of that. So once that becomes the resistance, then we can really start focusing on the dollar being under a dollar, Australian dollar being under the dollar. So yeah, but in the meantime here, you need to use this here, this subgroup 2 here is support or resistance. Once that becomes the resistance there, then you can use the midpoint, the 50 here, and so on to the downside. But just honing in there a little bit closer here is that on the 5-minute chart, that last little leg that's come down through here, if the 72 becomes the resistance through here, by all means short it, but also expect that there is 5 waves down here in terms of the 1, the 2, the 1, 2, 3, 4, 5 for the third, okay, the 4th here, the 5th. There could be another low coming in and then a retest back. So down for 1, back for 2, and then down for the 3rd. So just trade very small positions here, if that's possible, and then wait for this to complete a little bit. So it might be to there already, actually. Yeah, so that could be the 1, the 2, the 3, the 4, and the 5. That looks better. So the A, the B, and the C here. So yeah, it should sort of fail within here, depending on Obama's speech, and then move down. So yeah, prepare for short trades in this section over here if the market is going to stay below the 106 here. Alrighty, well, that's it. Now, the point being is that how the market closes on the Friday is how it's likely to open on the Monday. So just be aware of that. I would like to put short trades in the market today, but I'm just not sure about the situation. So we've got enough in the market, so I think we'll just leave it at that. But you could check back in the mid-morning and also later on in the afternoon on today as well, and I might put some trades in there. So yeah, just just sort of just trade a little bit lightly. We've got plenty of time, and we've got plenty of short trades in there if that's going to go onto that side. Those long trades that we sort of reluctantly put out yesterday for a short term to the upside, and the idea was to get to break even yesterday as quickly as possible by taking some profit or locking things in and do whatever you need to do. But you understood that there was risk with those long trades there, and I tried to make that as clear as possible. But we'll see how we go with those. But we're chasing the bearish picture there, but support on our local market on top of 4,200 here would swing the bias to the upside at that stage there. So that's something to look forward to look at as the day progresses there. Alrighty, well that's it. Well, good morning, good luck, and have a good weekend. Cheers.